The Bitcoin halving is coming, and soon. It's less than 2 weeks away. But what is the Bitcoin halving? Why is it so important and in so many news headlines? Will the price of Bitcoin get cut in half? Will everyone have half as much Bitcoin? Will it make Bitcoin go to the moon? Let me break it down for you. The Bitcoin halving is an event that reduces the amount of newly created Bitcoin by half approximately every 4 years. Historically, following each halving, there has been a surge in Bitcoin's price, and although the time frame for this increase has varied between cycles, it has taken anywhere from between 6 to 12 months in the past. And when Bitcoin's price skyrockets, it takes the rest of the crypto market along for the ride, which is always fun to watch, kind of like your favorite roller coaster ride. So when does this happen? The next Bitcoin halving is going to happen at block 840,000, which is estimated to be on April 20th, 2024. Now, this is a bit of a moving target, and we won't actually know the exact day until we're a little bit closer. But yes, you heard that right. We might have the Bitcoin halving happen on 4/20. So wake and bake, baby. On this day, the block reward for miners will be reduced from 6.25 to 3.125 Bitcoin. And I'll explain what this means in a bit more detail in a moment. First though, why is the halving so important? Well, the halving is essential because it ensures that the supply of Bitcoin is kept in check and prevents hyperinflation. This puts the total supply of Bitcoin limited to 21 million Bitcoin, which is what gives Bitcoin such strong economics. And this puts the total supply of Bitcoin limited to 21 million Bitcoin, which is what gives Bitcoin such strong economics. And that's super important because look at what's going on in the US and other countries. Are your groceries the same price they were just a few years ago? Or are they higher now? For most of us, they're higher. And this is because of inflation. A small group of people who run the Federal Reserve in the United States can basically print trillions of dollars with little to no input from citizens. You know, the money printer go brr. When there is more currency printed in mass, all the money you hold now is worth less than it was before. Inflation. This is why the halving in Bitcoin is so important. Not only is the new supply of Bitcoin shrinking, but we have total clarity into the monetary policy of Bitcoin for the next 100+ years. With the Federal Reserve, we have zero idea if they will print another $1 trillion tomorrow or 1 year from now. With Bitcoin, we know exactly how much will be created and when. But just as important is that the halving means that miners' earnings will be cut in half in terms of Bitcoin and also in terms of the USD value, unless there is an increase in the price to compensate for this. The good news here is that the reduction of mining rewards along with some unique catalysts are setting the stage for an increased Bitcoin demand unlike anything we've ever seen in previous cycles. And my guess is that it will cause the Bitcoin price to go way past its most recent all-time high. But let me explain the halving a little bit more. The halving in its simplest form is the process of gradually reducing the rewards of Bitcoin mining. Simply put, miners who dedicate their computational power to securing the network and verifying transactions will receive only half as much Bitcoin for their effort. As of now, the first miner to solve a complex math puzzle gets rewarded with 6.25 Bitcoin, while after the halving, they would only be getting 3.125 Bitcoin. All halvings are evenly spread out every 210,000 blocks, or approximately every 4 years. The next one is set to happen at block number 8,000. Nope. The next one is set to happen at block number 840,000, which sets the date to around April 20th, 2024. The first ever halving happened on November 28th, 2012, and cut the reward for Bitcoin mining from the initial 50 Bitcoin per block reward to 25 Bitcoins for each block mined. Just imagine mining Bitcoin with your laptop and solving blocks that pay you out 50 Bitcoins each. Oh, if only I had a time machine and future Andy could just zip on back and tell past Andy to mine some Bitcoin, you dummy. Well then on July 9th, 2016, the second halving reduced the block reward by another 50% from 25 to 12.5 BTC. The third and most recent halving on May 11th, 2020 slashed the rewards to where they're currently sitting at 6.25 Bitcoin per block. And again, this current halving, the fourth halving, will take the block rewards from 6.25 Bitcoin to 3.125 Bitcoin. Now, the only way for new Bitcoin to come to life is by miners creating blocks in a chain, hence the term blockchain. These hardworking miners are the lifeblood of the Bitcoin network, using their powerful computers to crack complex math puzzles, confirming transactions, and chaining up new blocks. They're rewarded with Bitcoins for every every block mined, this is known as the block reward. These blocks on the blockchain are collections of transactions that are being sent and received on the network. When a block is solved, those transactions get confirmed on the network. That's how we know when a transaction was successful. For solving a block and adding it to the chain, miners receive a reward. This is the block reward, which right now is 6.25 Bitcoin, or about $434,000 at today's price. However, it's very unlikely that a single miner or one single machine will solve a block. You need lots of power to solve blocks usually. So either you have tons of machines yourself, or you join a mining pool and pool your machine's power together with hundreds or thousands of other machines. Then when you as a group solve a block, you split it between all of you proportional to how much of the hash rate you have. And the reason it's called mining is because just like real mining, you need to invest energy in order to get rewarded with Bitcoins, and there is only a limited amount available. Again, there will never be more than 21 million Bitcoin in existence. Now, the key thing here is that no one actually controls the halving. It's just a pre-programmed event that will continue to occur roughly every 4 years until the final supply of 21 million Bitcoin is reached. And as of today, almost 94% of all the Bitcoin that will ever exist has already been mined, and that number is set to go up by 99% by 2035. The very last Bitcoin is estimated to be mined in the year 2140, when the block reward would drop below 1 Satoshi, which is the smallest denomination of Bitcoin. Of course, that's going to happen in about 116 years from now, so who knows if we'll still be around. I mean, fingers crossed, maybe I'll get my brain uploaded to the cloud and virtual Andy will still be around to see the last Bitcoin mine. Maybe still making dad jokes and talking about crypto on YouTube, if I haven't upgraded to posting on the intergalactic internet by then, of course. But maybe the most important aspect of all this for most people is that the halving seems to make orange coin go up. The halving is viewed as a major catalyst in the price of Bitcoin going way up. But how does that work? Well, the theory goes like this. After the halving, miners sell less Bitcoin into the market. This exhausts a large percentage of sell pressure. Then new buyers enter the market, which pushes the price up. The financial media starts talking about Bitcoin, influencers and evangelists go viral, on-chain activity picks up, VCs pour money into new businesses supporting the ecosystem, more businesses equals more marketing equals more users, which fuels more buyers, more on-chain activity, and more social media coverage, all while having less available coins to buy. And voila, new all-time high prices. So we now know that halvings have historically turned Bitcoin into a rocket, making it moon. But even the fastest rocket needs fuel to propel it, right? So what's it going to be for this cycle? The answer to that might just be the approval of the Bitcoin spot ETFs that happened back in January of this year. Now holding over $50 billion in Bitcoin, they have become the most successful ETF launch in history. We've just seen total ETF inflows in the range of 30,000 Bitcoin per week, and this might just be the beginning. So that's the short side of the how, but what about the how much? When the first halving happened on November 28, 2012, Bitcoin's price was $12. The following year, it peaked at $1,152, which means a surge of almost 9,000%. By the time the price had fallen back to near $200 in 2015, critics proclaimed the bubble had burst and Bitcoin was dead. The second halving on July 16, 2016 saw Bitcoin go from $664 to a peak of nearly $20,000 the following year, which is a phenomenal 2,600% increase. This second halving saw Bitcoin and crypto burst into the spotlight with a wave of media criticism washing over it. The third and most recent halving occurred on May 11, 2020 and was kind of unique by Bitcoin having two all-time highs. When the halving started, the price of one Bitcoin was $9,734, and then the following year it first reached an all-time high of $67,000, only to smash it 6 months later when it peaked at close to $70,000. In both cases, Bitcoin saw returns of around 700%. So what could happen this time? Where could the price go? Well, price predictions are just that, predictions. No one, no matter how confidently they say something or promise you they know it's going to happen, can actually tell you what the future is going to look like. Sorry. So with that said, I'll give you my best guess. My base case prediction for this cycle is $100,000 to $150,000 Bitcoin. I think we would likely have hit $100,000 Bitcoin last cycle if the ETFs were approved, but they weren't. But now we have those, and I think all bets are off now. My bull case is $200,000 to $300,000 Bitcoin. If all the right factors happen at the right time, I think we could fly past 200K or even 300K. Now, my extreme bull case would be $500,000 plus Bitcoin. If this cycle is unlike previous cycles and we see unprecedented inflow like we already have with the ETFs, and we see Bitcoin erode the market cap of something like gold, then I can see this happening. But that one's a big long shot, and I'll be plenty plenty happy with $100,000 plus Bitcoin. So what can you do to take advantage of all this? Well, a simple strategy yet effective strategy that I've been using for the past 2 cycles has been to simply dollar cost average into Bitcoin. Just automatically buy it on a regular basis. Another great opportunity here is to buy your own Bitcoin mining machine and to use it to, well, mine Bitcoin. And then when the time is right, you can also flip the machines for a nice profit. And that's a 2-for-1. You get to increase your stash of Bitcoin and you also get to turn a nice profit from the machine itself. And yet another way I found to invest that is super interesting is an opportunity called Quantum Expeditions. I've talked about it in a previous video. Very briefly, Quantum Expeditions is a Bitcoin mining company that is currently in its fundraising stage and is already mining Bitcoin and plans to scale up post-funding. I've become so impressed with their vision and the team that I've decided to join them as an advisor. Now, if you are curious about Bitcoin mining, then watch this video where I'll show you exactly how I earn $11,000 a month right now with mining and answer if it's worth it or not. Goodbye.